Account. A record of increases and decreases in specific asset, liability, or owner's equity items. Chart of accounts. A list of accounts and the account numbers that identify their location in the ledger. Compound entry. A journal entry that involves 3 or more accounts. Credit. The right side of an account. Debit. The left side of an account. Double entry system. A system that records in appropriate accounts the dual effect of each transaction. General journal. The most basic form of journal. General ledger. A ledger that contains all asset, liability, and owner's equity accounts. Journal. An accounting record in which transactions are initially recorded in chronological order. Journalizing. The entering of transaction data in the journal. Ledger. The entire group of accounts maintained by a company. Normal balance. An account balance on the side where an increase in the account is recorded. Posting. The procedure of transferring journal entries to the ledger accounts. Simple entry. A journal entry that involves only 2 accounts. T account. The basic form of an account. 3-column form of account. A form with columns for debit, credit, and balance amounts in an account. Trial balance. A list of accounts and their balances at a given time. A blank is a record of increases and decreases in specific asset, liability, or stockholders' equity items. Account. Assets, dividends, and expenses are increased by blank and decreased by blank. Debits, credits. Liabilities, common stock, retained earnings, and revenues are blank by credits and blank by debits. Increased, decreased. The basic steps in the recording process are blank each transaction for its effects on the accounts, enter the transaction information in a blank, and transfer the information to the appropriate accounts in the blank. Analyze journal ledger. Discloses in one place the complete effects of a transaction, provides a chronological record of transactions, and prevents or locates errors because the debit and credit amounts for each entry can be easily compared. A journal is the entire group of accounts maintained by a company. The ledger keeps in one place all the information about changes in specific account balances. The ledger is the transfer of journal entries to the ledger accounts. This phase of the recording process accumulates the effects of journalized transactions in the individual accounts. Posting is a list of accounts and their balances at a given time. Its primary purpose is to prove the equality of debits and credits after posting. Also uncovers errors in journalizing and posting in is useful in preparing financial statements. Trial balance. A journal entry that involves 3 or more accounts. Compound entry. The basic form of an account. T account. Which of the following statements about an account is true? In its simplest form, an account consists of 2 parts. An account is an individual accounting record of increases and decreases in specific asset, liability, and stockholders' equity items. There are separate accounts for specific assets and liabilities, but only one account for stockholders' equity items. The left side of an account is the credit or decrease side. B. How debits is affecting the accounting equation. Increase assets and decrease liabilities. Debits increase both assets and liabilities, decrease both assets and liabilities, increase assets and decrease liabilities, decrease assets and increase liabilities. Decrease assets and increase liabilities. A revenue account is increased by debits, is decreased by credits, has a normal balance if a debit is increased by credits. Is increased by credits. Accounts that normally have debit balances are assets, expenses, and revenues, assets, expenses, and common stock, assets, liabilities, and dividends, assets, dividends, and expenses. Assets, dividends, and expenses. Which of the following is not part of the recording process? Analyzing transactions, preparing a trial balance, entering transactions in a journal, posting transactions. Preparing a trial balance. Which of the following statements about a journal is false? It is not a book of original entry. It provides a chronological record of transactions. It helps to locate errors because the debit and credit amounts for each entry can be readily compared. It discloses in one place the complete effect of a transaction. It is not a book of original entry. The purchase of supplies on account should result in a debit to supplies expense and a credit to cash, a debit to supplies expense and a credit to supplies, a debit to supplies and a credit to accounts payable, a debit to supplies and a credit to accounts receivable. A debit to supplies and a credit to accounts payable. The order of the accounts in the ledger is assets, revenues, expenses, liabilities, common stock. Dividends, assets, liabilities, common stock, dividends, revenues, expenses, common stock, assets, revenues, expenses, liabilities, dividends, revenues, assets, expenses, liabilities, common stock, dividends, assets, liabilities, common stock, dividends, revenues, expenses, is a collection of the entire group of accounts maintained by a company. A ledger transfers journal entries to ledger accounts. Posting. Before posting a payment of $5,000, the accounts payable of Senator Corporation had a normal balance of $16,000. The balance after posting this transaction was $11,000. The trial balance of Clooney Corporation had accounts with the following normal balances: cash $5,000, service revenue $85,000, salaries and wages payable $4,000, salaries and wages expense $40,000, rent expense $10,000, common stock $42,000, dividends $15,000, and equipment $131,000 is the normal balance of this account, a debit or a credit. Assets. Debit is the normal balance of this account, a debit or a credit. Liabilities. Credit is the normal balance of this account, a debit or a credit. Common stock. Credit is the normal balance of this account, a debit or a credit. Retained earnings. Credit is the normal balance of this account, a debit or a credit. Dividends debit is the normal balance of this account, a debit or a credit. Revenues credit is the normal balance of this account, a debit or a credit. Expenses debit cash, common stock. State the account that is being debited and credited. In this situation, the owner invests $4,000 cash in exchange for shares of common stock. Equipment, accounts payable. State the account that is being debited and credited in this situation. Purchases equipment on account for $900. Rent expense cash. State the account that is being debited and credited in this situation. $800 cash is paid to landlord for June rent. Accounts receivable, service revenue. State the account that is being debited and credited in this situation. Bill Xelve $300 for welding work done on account. Increased. Consider this and then answer. Someone opens an office as a financial advisor, investing $5,000 in cash in exchange for common stock. Therefore, the asset is in the stockholders' equity account. Is increased, decreased. Consider this and then answer. Pays insurance in advance for 6 months, $1,800 cash. Therefore, the asset is increased, decreased, and the asset is increased, decreased. Increased. Consider this and then answer. Receives $1,100 from clients for services provided. The asset is increased, decreased, and the revenue is increased, decreased. Decreased. Consider this and then answer. Pays secretary $1,000 salary. The expense is increased, decreased, and the asset is increased, decreased. What are the basic steps in the recording process? Analyze, journal, ledger. Retained earnings. Net income that is kept in the business. Chart of accounts. A list of accounts and the account numbers that identify their location in the ledger. Common stock. Issued in exchange for the owner's investment paid into the corporation. Journalizing. The entering of transaction data into the journal. True or false? The left side of an account is the credit or decrease side. False. Normal balance of accounts payable. Credit. Normal balance of advertising expense. Debit. Normal balance of service revenue. Credit. Normal balance of accounts receivable. Debit. Normal balance of common stock. Credit. Normal balance of dividends. Debit. State what is debited and what is credited. Kaustav Sen invests $4,000 cash in exchange for shares of common stock. Cash, common stock. State what is debited and what is credited. Purchases equipment on account for $900. Equipment, accounts payable. State what is debited and what is credited. $800 cash is paid to landlord for June rent. Rent expense, cash. State what is debited and what is credited. Bill Xelve $300 for welding work done on account. Accounts receivable, service revenue. State what is debited and what is credited. Pays insurance in advance for 6 months, $1,800 cash. Prepaid insurance, cash. State what is debited and what is credited. Receives $1,100 from clients for services provided. Cash, service revenue. State what is debited and what is credited. Pays secretary $1,000 salary. Salaries and wages expense, cash. A summary of all the financial data in the account ledgers that ensures the figures are correct in balanced. Trial balance.